When we talk about what's happening with Monsanto, you got to talk about what the growth prospects are, not just here in the U.S., but all over the world. This is very much a global story for Monsanto, right?
That's right, Dominic. So Monsanto has been transforming itself from a weed killer chemicals company to a leading biotech seed company. And they have a very established business in the U.S., and now the growth is really coming from Latin America, in particular from Brazil and Argentina.
So as you look at the growth prospects, it is very much about some of the emerging markets, places like Latin America or Southeast Asia. What exactly is the bullish case to own? Why do you want to own Monsanto shares or go long the stock?
Right. Well, there are two reasons why I want to be long Monsanto's shares. Number one, they indicated a very strong order book when they reported their first quarter results in January. And the deferred revenues of $2.5 billion indicates a really strong upcoming quarter, which means the farmers have already paid revenue in advance for the planting season in the U.S. So that's a very strong indication that I think when the quarter reports tomorrow morning, it's going to be really bullish, number one. Number two, they're also going to give us an update on how they're moving ahead with some of the patent issues that they have faced in the past, especially in Brazil. So I'm also looking forward to some positive commentary around that.
So positive comments all around from Monsanto. If you talk about an options trade, I think call options, I think bullish. So how exactly would you do it? Would you just buy call options outright? Or what exactly would you do for a structured trade on this particular?
So in order to structure an options trade around it, although owning a stock outright is also pretty decent, we recommend that. But if you're looking at a leveraged play, then options, we are looking at the July call spreads to provide us the best leverage.
So which call spread are you talking about?
So
for
in
July?
particular, stock trading around 104. It's probably selling off right now because of pre-earnings jitters. That's typical, nothing to really worry about. So July 110, 120 strike call spread. So we buy the 110 call in July and we sell the 120 call against it. And we want to further cheapen the cost of this call spread by selling the April 97.5 puts.
Now, I want to hold you up there because our viewers, we have the chart for you right now on the profit and loss here. In essence, what you're looking to do is buy the upside via a call spread, but then sell a put option to help finance the trade even further. So what exactly is the risk-reward profile for this particular trade?
So in the worst-case scenario, you end up owning the stock at 5% discount to the current market price. And in the best-case scenario, you multiply your money 9 times. So that's really the risk reward that we find. And the overall cost of putting the trade is around 1%.
So overall, what you're saying is you can go long a call spread, but look to cheapen it up a little bit by selling an April, a nearer dated put option. And overall, what you're looking to do is capture upside if Monsanto, the max profit you get here is if Monsanto goes above that $120 cap price by the time July comes around.
That is correct.